Today I'm talking about how to use volatility to catch potential bounces. So this market is really falling, and it's not exactly the best time to decide to become an investor just because things haven't really settled out yet. We don't know if we're going to do like a couple bounces, test to the 200 from the bottom or the top, and how many times that's going to happen before, we really take off to the downside or the upside. So I would prefer just to be a day trader in this kind of market because, you could really get messed up and stuck in something and end up to the short side, especially if we enter a bear market. There's a lot of things going on like potential war, more COVID variants, interest rate hikes. There's just a lot of bad news out there. And that makes me think, there could be more downside or just, more volatility. And when volatility is high, we can actually capitalize on that. So volatility is a good thing when you're a trader, not so much when you're an investor because you're kind of just holding on for dear life. And so that's why today I'm talking about using volatility as a day trader, short-term trades. So my favorite volatility ticker to use is the UVXY. You can trade it directly and it's cheaper. So there's other tickers like the VIXY. This is another volatility ticker. There's also VXX. And those two are pretty similar, but the UVXY is cheap and it's a leveraged volatility. So moves on UVXY are going to have a bigger percentage increase or decrease relative to VXX and VIXY. Now, if you ever want to short VIXY, which is also something that I do, you could use the ticker SVXY. I'm sure there's other volatility tickers out there, but these are the ones that I kind of know about. But again, I really like to stick to the UVXY because I'm cheap and I don't want to pay to borrow to short. When I do want to short volatility, I just pretty much purchase SVXY. And yeah, it can get really confusing because now you're having to think in like double opposites. So when you're long SVXY, you're actually shorting volatility, and that can get confusing. So make sure you kind of have an idea of how these concepts work before you start doing that, because it can get really confusing. It can throw you off. So we're just going to stick with talking about longing VIXY right now, and that would be using the ticker UVXY. So first thing you want to do is, so I'm looking at a 5-minute chart here, and you want to draw some trend lines. And I've noticed that lately I've been kind of working with UVXY, and I've noticed that these trend lines, they really stick. So you could do something like this. I would want to connect this bottom here and create like a line like this, and then maybe just move it up just a pinch so that we get more data in there. Like that looks pretty good. And I also noticed that if I connect the low of the pre-market like right here to the high of, oops, let me get rid of that line. So the low of the pre-market to the next day's high of the pre-market, that can give me some good lines sometimes to work with. And then let me go back like one more day and try that again. So let me connect the low of this pre-market to the high of this pre-market here. Fast forward to today, and look what we got. So I'm also going to just do one of these guys right here. And this is Pacific time right here, so 3 hours ahead in New York. So I had these lines drawn before the market had opened, And these lines actually had really worked well for me. So when I was trying to find a quick bounce, and so in markets like this, you're going to want to try to do quick day trades. Don't hold for too long because you'll really get chopped up, as you can see. I would be shorting the VIX here and longing the VIX down here. Alternately, like let's say you're trading a large cap stock that really aligns with the SPY. For example, Tesla has been really volatile. Tesla is just generally always volatile, but I like trading Tesla in conjunction with SPY because they kind of move together, sort of. So down here, you can take a quick trade on Tesla long, and then I would probably take some off here and here when we're hitting here. So yeah, that's kind of how I like to use volatility to find bottoms and bounces. So up here is when the fear index is really high, and when you're hitting fear index highs, everyone's kind of like at the max of their panic, which means you're probably going to have a bounce after that. So let's see, at like 920, let's see what was happening with Tesla. And if we're looking for a bounce, I would imagine Tesla would be hitting a bottom and turning around at about 920. Here's 920. It was catching a bottom here, which also aligned with this day low. So we ended up doing a bounce like pretty much in conjunction with the fear index, which is pretty cool to see the alignment and how very much almost like to the minute how aligned it was. Now, you may notice these tails here, so there is a lot of chopping today. But if you can hold out through these chops and wait to get to your levels before taking profit, you can make money. It's tough though, so you really have to stick with your guns and have conviction in the direction that you want to trade. Let me go back to you, Vixie. I don't use all this stuff. I really just look at the 5-minute chart, and I don't even really put indicators on here. One thing that might help a little bit would be like to be able to see the volume. So I'm going to drop my 5-minute indicators on there. It's going to put on all this other stuff, but just ignore these lines, and we just want to pay attention to the volume, which is down here. So another thing you might notice is around 920, the volume is really high here. But the candle isn't really pushing up much higher. So if you see a big above average volume like that, you're probably going to want to see a big candle if there's going to be continuation. And that volume isn't just another way to confirm that, we might have a bounce right here. So today I actually took a position on the SVXY because I thought this would be a good time to short volatility, and closed out a little bit here and then down here some more. So that's kind of how I trade volatility. Oh, another thing that you want to look at, let me just get rid of these, is the daily chart on volatility. So every time there's a bit of panic, you see these spikes here. So if you're an investor and the market is starting to sell off like it did yesterday and the day before, you want to check volatility to see if we're getting that spike, because that could signify kind of a bottom, or at least a temporary bottom in the market. And that's when you can possibly take your positions. But, always just be careful and be aware of market conditions, because otherwise you could always get stuck. Like, let's say you started a position here. I wouldn't really say that's much of a spike to start buying. But, people are buying the dip. So let's say you're you're an investor and you're like, okay, I'm going to buy the dip here. Well, you know what? You just got kind of screwed because there was 2 more days of just pure selling. So you really want to wait for these volatility spikes. So this would have been probably a good time, 9:20 Pacific time today, to maybe open some positions. But today is also just a good day in general, just because we are in the spike right now. So today could be a good day for a potential bounce. Maybe we could see this go back down, but there's also a chance that the volatility will decrease a little bit and then pop back up for another spike. But you never know. I mean, this spike does look good relative to these spikes, don't you think? What if we drew a line through those? Let's shrink this down. So maybe we bring this in a little bit like this. I mean, that looks like a pretty good spike for us to come back down. Also, if we look at the SPY on the daily chart, we'll see that, you know, we've done nothing but straight down. So tomorrow would be a good day to start a bounce to come back up and test the 200-day from below and maybe try to get back above it and reclaim it. So yeah, those are my thoughts on how to use volatility to help you in finding bottoms or short-term bounces, or if you're an investor, potential entry points. Hope you guys enjoyed this video. Check me out on StockTwits at HeyLittleTrader with 2 R's. I try to post pivot points on stocks that are gapping with volume over 100,000 in the pre-market with a news catalyst. And lately there just really hasn't been anything because the overarching macro news has been kind of just taking over. So, yep. I hope you enjoyed.